Okay, so let us proceed. We are Blue Sky Forex, part of Blue Sky Binary, an education, research, and trading group that teaches a range of trading strategies. We also provide 24-hour trade support and analysis to allow FX traders to trade safer. Now, we are presenting this webinar on behalf of Hot Forex in order to educate you and help you become highly profitable currency traders. Two types of markets that you will encounter, either the trending type or the ranging type. Okay, and support and resistance levels take on different roles depending on which type it is that you are trading, which type of market. Okay, so in a trending market, support and resistance levels will be somewhat different as opposed to a ranging market. And that's the first thing that you need to do, is to identify if the market is ranging. Then you will use a certain strategy, which I will teach you next, as opposed to if the markets are trending, in which case you will use another type of strategy. The support and resistance levels themselves, they take on different functions depending on what price action, what the market is doing. So if you have identified a ranging market, it typically looks like this, where you see aggressive moves, large candle bodies, small wicks, as the price is traveling from one support to a resistance and from one resistance to a support. It respects these levels, okay? And generally speaking, as it approaches these levels, you start to see classic signs of price exhaustion, okay? That means dojis, shooting stars, and then other signs that the trend is reversing. And so you can start to see those, and you can know already that the resistance or support level will be respected. Now, the easy strategy here is to set pending orders, right? Not at market orders, but pending orders, where you select a order type which gives you the ability to put in a desired price level, which is away from the current price. So if you see prices moving up, you'd actually send the pending order at the nearest resistance, which could be R1 or R2. It doesn't matter. But always note it's important for consistency's sake that you're comparing like for like. For example, if this is R2, then this here would be S2. Then you're just basically playing a much wider range depending on your risk levels. If you're higher risk, then you will basically take short positions at R1 and long positions at S1. You're basically bouncing. You're playing a bouncing market, this ping pong action. And you can set your stop losses. Let's say you've taken a short here. You can set your stop loss at the next logical point of resistance, which is R2. Okay? And if you're going long, everything I've said holds in reverse as well. So if you're opening a long at S1, you would place your stop loss at S2, which is not pictured on this graphic here. And what's worth noting is that the price will normally challenge and re-challenge support and resistance levels. This process of re-challenging happens typically twice or three times, which gives you the opportunity to milk that bounce. But if it re-challenges it more than 3 or 4 times, normally what happens is you get a break, right? In this case, this is a northern break where you had a resistance level here previously. Price hit it once, it bounced off. On the second re-challenge, it actually broke through it. And when we are talking about breakages, we're typically talking around 20 pips, right? A break is not 5 pips. A breach, 5 to 10 pips, that's not considered a breach. It needs to be 15, 20, sometimes 25 pips. And then you know, okay, it's broken the channel, it's broken the resistance, and the new resistance becomes the new support. So the previous resistance, becomes the new support. And what that means is you can actually expect the price to not only have broken this, but then continue to the next point of resistance. You see that here on this chart really well. Okay, so what you see here is a very traditional ranging market, and the price has challenged this range a few times, and it's broken it finally with a Bollinger breakout, and it's continued to the next point of resistance. And this is called a swing high, and another swing high, and then it reverts into another ranging market. Okay, and you can play this action repeatedly. So the way you would trade a ranging market is simply as we taught you, and the way you would trade a trending market is that you have two options here. Okay, the first option is to play it aggressively, and normally this is driven by news. For those of you that have been on our news webinars, you know exactly what I'm talking about. You wait for the break, a decisive break, so then you know, okay, the previous resistance becomes the new support, and you enter a long trade and you play out this first swing high. Now, the price may go to R2, it may go to R3 all the way, it may not go all the way to those directions. So you want to be conservative with your profit taking. But generally speaking, you can use a trailing stop loss here. And your stop loss levels, you can use a trailing take profit. And your stop loss, you can also use trailing on this. The key thing to note is that your stop loss will be typically set at the previous resistance, which was broken and is now the new support. And this can be dynamic, so it doesn't have to be a flat line. You can actually keep moving your stop loss up, set at the moving average. Price generally, when it breaks a new high or a new low, everything I'm saying can be reversed as well. When price breaks a new high, it will retrace. It's not a question of if it will retrace, it's a question of when. And so when it retraces, typically it will give back around 30-40% of its gains, sometimes all the way up to 50-60% of its gains, right? And those of you that use Fibonacci, you'll know exactly what I'm talking about here. And price will come to the moving average. Two important things to note here when you're trading a trend. The first thing is you don't have to enter immediately when the price has broken a resistance. That you can do that, and that's a way to trade a breakage, a break of a resistance level. But a better way, a safer way, is to wait for that initial retracement and then enter around the moving average, a trade in the direction of a trend. But here what you're doing is you're not milking this first swing high, but you're actually waiting to milk the second swing high. And when a trend happens, it happens in waves of 3 typically, right? It rises there, you typically get 2 to 3 swing highs and then 2 corrective waves. That's classic Elliott wave theory. And so that's important to take on board, is that if you've missed the first wave, do not worry, don't chase it, wait for the retracement and then enter. Okay? So that's a safer way to play a trend. And if you can correlate this with news, that's really good because the news will give you liquidity, right? For example, look at Euro British Pound right now. The Euro British Pound has dropped, driven by a better than expected BOE meeting. What that basically means is the Bank of England, they were voting to keep rates unchanged, but actually out of the 9 votes, only 8 people now voted, and 1 person showed some dissent. So people saw that as a bullish British pound move, and that's why you've seen the British pound shoot up, okay, causing the Euro GBP to drop, if that makes sense. Okay, so this is news that's driving this trend. Does that mean that you enter now? No. You can, but then you need to take a longer view on your trade. What we would suggest is wait for the price to retrace up, right? Wait till it retraces up to the nearest resistance, which is around 8700, right? So I'm talking about a live move right now, Euro GBP, if you pull it up on your charts, okay? And basically you want to wait. And the trend will continue south again, most likely, right? But now what it's going to do is it's going to experience a bit of a retrace. So that's how you trade your classic support and resistance levels. Okay? And when I say classic, I'm talking about the mathematically calculated floor trader levels. These are the most widely used levels. If you Google support resistance, you'll get a range of indicators free that you can add to your MT4, and these support resistance lines are drawn on your charts. Focus on 1 hour and 4 hour support resistance levels. Do not focus on 5-minute, 10-minute, 15-minute charts. You can use those for scalping, not a problem, to enter your positions, but to identify where the market is headed and which key resistance and support levels hold, focus on 1H and 4H charts. All right. There are other types of support resistance levels. There is the Camarilla method, there is the Woody method, and there are Bollinger-based methods as well. Okay. We do not suggest that you focus so much on the Woody and Camarilla methods. They do work, but the most widely respected and used ones are the floor trader methods. So with this in mind, once you have this, um, the next type of support resistance levels that you can trade as well, what I've shown you here is the very classic support resistance level trading, is actually manual psychological levels and round numbers. What I mean by manual is that you're not focusing on an indicator that's calculating support resistance levels for you. Here you have to do a bit of work yourself, but it works very well. Okay. And it finds support and resistance levels in the market that are not obvious, that are not mathematically calculated. For example, this is a British pound Japanese yen 1 hour chart. It's not the live chart now, but I can show you live examples as well. What you see here is an 1 hour chart, and you'll see that there's a southern trend, right? The price is on the lower Bollinger Band, and it's generally hitting new lows every hour, new swing lows. And then by the time the hour closes, it's retracing up, right? So it created a very sharp wick. This is known as an elastic waterfall formation. It's a waterfall, but it's elastic because the price has elasticity in it. So you'll see that it bounces up as the hour closes. What you can do is you can draw a line tool, which is there on your MT4, connecting all the lows of these candles and extrapolate it into the future. And what you'll see is that generally speaking, again, it's not a 100% strategy, but it's a 60% right, 70% right, which is all you need, is that the price in the new hour will actually open, go down to challenge that previous diagonal flight path or psychological point of support that you drew, and then it will bounce back up. There will be a strong bull action towards the end of the hour. This is known as the end of hour effect. You can actually find these points of interest across the market, but you should focus on 1 hour and 4 hour charts. Now, this yellow line is something you drew into existence, right? There's something here that is not explicitly calculated by floor trader levels, if you add your support and resistance level indicator, but it exists, and it's certainly scaring the bears, right? And the bulls are winning. So what you would do is you would enter a long position somewhere here, look where my mouse is, at the current candle, with the view to close your position at the end of the hour and scalp a few pips, 5 or 10 pips. You can't make a lot of money on this, so it's a short-term position, but the beauty is that you can shut your position at the end of the hour. You don't have to leave it running for the rest of the day because you don't know what's going to happen to price. Now, if price breaks south, then you're done. You shut your position, you lose a bit of money, but not much. This is a very constrained and intelligent way of actually trading support and resistance levels. Okay. The second one is round numbers. Take a look at the Euro GBP. What do you see in the Euro GBP right now? What you see in the Euro GBP is that the price has dropped, driven by news, okay, the Bank of England, and it fell from 8750 to 8675 roughly. But notice that it went through 8700. 8700 is a psychological support level known as a Psi Sup or Psi Res level, as is 1.5000 or 1.5100. Every time the price moves through 100 pips, it goes through a bunch of zeros, right? These are psychological levels. And price tends to have resistance around there. Look at Euro GBP right now. It's stuck, right? The magnet of price, 8700, is pulling it up, right? Because it's not breached it decisively enough. So you can use this to your advantage. When the price is near a psychological resistance level, you can go short. If it's dropped heavily near support level, you can consider going long. Take a look at US dollar Swiss franc on the 1 hour chart. You see this as well, right? For a good 12 hours, or let's say 8 hours, yesterday the price fell, US dollar Swiss franc after the FOMC, and you'll see that the price was hanging around 1.0000, which is actually parity, right? And that's a big resistance. And now finally it's broken through many hours later. But you could have used this opportunity to keep going short each time the price hit the 1.000. Okay? So this is psychological round numbers. Now this is just kind of reiterating what I already said. Key is do an identification of the market conditions. Is the market heading up or down? Is it in an up-down trend in a range, or is it in a trend? Depending on that, you will then deploy your strategy, right? So identify, then do a macro check. Make sure you're not going to get screwed over by news if you're trading a range-bound market, because that can destroy your stops. That can destroy the support resistance levels very easily. I call that a macro check. And with regards to execution, use pending orders. You don't have to stay there looking at charts. Use pending orders. Use your trailing stops. Okay. So with regards to risk reward, now this is important. If you're trading a range-bound market, then generally speaking, your risk reward is going to be low. Typically, maybe slightly less than 1, ideally 1 or a little bit above. Focus on a higher win rate so that your overall expectancy is positive, right? So here, these type of opportunities don't last very long. They're very easy, low-hanging fruit opportunities, but generally speaking, you want to be in and out with them. Okay, so here you're going to possibly be going for 15, 20, 30 pips max. You're going to be scalp mode. With resistance breach plays like this, or support breach plays where you have a trend, especially one that's driven by news or liquidity, there you can actually really capture or milk more pips. Use your trailing stops, use your take profit levels. All right, so that's where we are. Okay, go for higher risk reward on the trend trades. Go for lower risk reward but higher win rates on the mean reverting opportunities. You can use dollar cost averaging, which is to split your lot sizes instead of purchasing one lot, a macro lot or a mini. Break it down into nano lots or micro lots, right? At ever improving better prices. What I mean by that is, if you are looking to enter a long trade here at the second wave, just at the start of the second swing high, you don't have to buy an entire lot here. Impatiently set your pending orders at the same amount of lots, 0.01, 0.01, 0.01, 5 of those, for example, for a total lot position of 0.5, and then you'll get a good average in price and you'll be in the money on all of them, right? Instead of buying the entire 0.5 at a worse price. So it's not martingaling. To be very clear about that, it's not martingaling, okay? Um, but it's smart investing, and dollar cost averaging is used by fund managers around the world. And again, just to reiterate, you can use trailing stops. Okay. Now let's end on some key dangers in currency trading. So support resistance levels are overused, used and abused by EA manufacturers. They'll typically make bots which just sit there and take positions when the price hits support and resistance. The problem with these bots is they can't trend, they can't read Bollinger channels, they can't read geometry, they can't read changing Bollinger channels, so they can't understand when the market has turned, and that's why they come undone during news. So be careful of those. Also note that very few percentage of traders make money longer run, mainly because many people don't take the time to understand support and resistance level trading. Support and resistance levels is the bread and butter of trading and investing. If you don't understand what I've went over today, put away your real money, because you're going to blow your account. You need to go and watch this webinar again and really understand these mechanics. Once you understand this, it'll be a significant upgrade to your trading potential. Okay? Now, going back to the bit on the EAs, you know we've been on these webinars for a long time. We've also told you that we've been working a lot of EAs, and we have, and we're very pleased to say that we have developed some that we are currently in beta mode. You can find them on Signal Hive, and the EAs are completely free. And right now we've not connected them to Hot Forex, but we're going to do that at the end of the month. So you don't have to leave anywhere. You're going to stay at Hot Forex. You can try the EAs out on your demo account and let us know your feedback after a month, okay? They're completely free, so we urge you to try them out. They've been researched for a long time. They have 10-year back tests, 10-year historical records, so you can see how the EAs performed during the FOMC measures that were taken by the US economy, that were taken by the European Central Bank to combat the systemic contagion that was caused by Lehman Brothers, by the entire collapse of the CDO bubble. A lot has happened in the last 10 years. These EAs, we show you all the tests, how they did, and now they're alive. Now, a small caveat, it's taken us 2 years to develop them, and they're still not perfect. The EAs only have a Sharpe ratio of 0.3 on an annual basis, which is low. We're working on getting them up to 0.1. Anything above 1 for an EA is considered holy grail. We will get there over time, And for now, you can see how the EA performs during drawdown and what type of monthly return it generates. It's a giant research project for us. It is our panacea. It is what we have focused a lot of our research on. All the techniques we teach you here over the last 2 years are being incorporated into those EAs. They're fully compatible with hot Forex. The EAs are not scalpers. They're not dependent on spread, so you don't have to worry about that. Hot Forex offers really good pricing conditions, good spread, and the EAs are well protected. Okay, that's it. It's now time for questions. You can email webinars@hotforex.com, or you can ask me questions here as well. Very happy to answer. Okay, seeing a few questions here. Sebastian, you can get the EAs at the end of this month at Signal Hive. I'll give you the instructions. Once we've connected to Hot Forex, we'll do that. We were actually in Cyprus. We met the Hot Forex team and the management, and we discussed the EAs as well. And safety of your funds, safety of your trading, long-term capital growth, protection of your capital. These are all the important things we discussed with them. So they'll be connected towards the end of this month, and then we'll let you know closer. Musengi is asking, where can I get MT4 floor trader levels? Just type in support resistance level indicator, Musengi on Google, and you can download many. They all do the same thing. Good. Chinedu Okolo is asking, how would you know if the price is going up or down after it touches the SR? Good question. So this basically is simple to answer if there's news. If there's news has happened, then it's going to break the support resistance level. Then it's going in the direction of the break. If there's no news, 60% of the time, this will happen here. So the probability is that it won't break and it'll come right back down. So news is a key indicator. Another thing is the Bollinger channel. I haven't shown Bollinger Bands here, but I should add them for the next presentation. If the Bollinger Bands are trending upwards and the price hits the upper Bollinger Band and it hits a resistance, there is a risk that it might actually breach further up. If the Bollinger Band is flat, then it'll probably come right back down. So look at the trajectory of the Bollinger Band channel. Okay. Any other questions from anyone?
She's not here. She's not here.
Last call for questions. Final call for questions.
Δεν ξέρω, είσαι με τη Ματίνα. Ναι, ναι. Ναι, μου στείλε ένα mail που καράφλεσα, αν είναι δυνατόν. Ποιον μίλησε η Ματίνα. Ποιον μίλησε η Ματίνα και της είπε ότι δεν μπορεί να κάνει το payment από το... Με την Ελεονόρα μίλησε. Ποιο είναι το τηλέφωνο της Ελεονόρα. Ναι, ναι.
Then Buniaski is asking, how do you know how far to put your SL, as in how many pips? So you have two ways to do this. First is focus on risk reward. So if your TP is 20 pips and you always want to have a risk reward of at least 1, then your SL should be 20 pips away as well from the current price. The other way is to back solve it. So if you want, if you're entering the trade at, let's say, S1 here in this bold line, then you want to basically place your stop loss at S2, which is the next logical point of support, because if price breaks, it would head there and then bounce up. Does that make sense? Any other questions?
Εσένα ποιος σου το είπε αυτό ότι δεν μπορεί να κάνει την πληρωμή από εκεί και να τα γυρίσω πίσω σε μένα και να τα κάνω από μένα κλπ. Ποιος σου το είπε η Ματίνα. Ναι. Καλά, θα πάρω την Ελεονόρα και λες ότι στη Ματίνα το είπε η Ελεονόρα.
Last call for questions.
Επειδή βρίσκεται η ίδια εκτός Αγγλίας. Διότι εδώ που πήρα από την τράπεζα, ένας λογαριασμός που ανήκει σε εταιρεία στην Αγγλία και θέλει να κάνει payment στην οποιαδήποτε χώρα για να αγοράσει προϊόν, μπορεί να το κάνει. Καλά καράφλιασα. Εδώ στην Ελλάδα είμαστε και θέλουμε να κάνουμε πληρωμή στο εξωτερικό και άμα είναι μέχρι 15.000 το κατάστημα δίνει έγκριση από τη μερών και το κάνεις. Όχι στην Αγγλία να μην μπορείς να το κάνεις, δεν καράφλιασες εσύ όταν το άκουσες. Ναι, για να πάρω εγώ την Ελεονόρα. Άσε μου, έλα, γεια. Ευχαριστώ πολύ. Can you take this number from this?
Okay, Saleh is asking how long we have to wait to know about the RS. Is it by time or how many candles? Saleh, are you asking about the normal support or are you talking about these manually drawn ones? Which one do you mean, please?
Try to call instead of 714-700.
Oh, I thought it was the whole thing.
Oh no,
I thought it was
714.
okay.
This is the...
I thought it was okay.
So here, Saleh, you have to wait on the hourly time frame or the 4-hour time frame for these candles to establish. So each hour will create this watermark, if you want to call it, or trail. Maybe that's the best way to put it, this trail. And you then when you have 2 or 3 hours, 2 or 3 hours of candles, then you can basically draw the flight path. As for the other one, that's auto drawn for you. So the support resistance levels, you just get an indicator and it'll draw it. Okay. Any other questions? Good. So this has been recorded. You can access it webinars@hotforex.com, and we will see you next week and have more information, of course, about the EAs. All right. Have a good trading week. Take care.